Welcome, dear traders. The main highlight of the week is the FOMC meeting. Traders are awaiting the Fed's key rate decision. Analysts note that many large central banks have already switched to aggressive tightening. Speculators have also priced in a 75 basis point rate hike. Curiously enough, such a big rate increase seems quite normal these days. However, about 9% of traders are still betting on a 1% rate hike at the July meeting. We should bear in mind that the Fed is trying to engineer a soft landing. Yet soaring inflation slows down manufacturing activity. For this reason, the watchdog is cautious when it comes to a more aggressive tightening. For example, the Manufacturing PMI index in July fell to 52.3 from 52.7 points. The Composite PMI index dropped by almost 5%, sliding to 47.5 from 52.3 points. For this reason, the Fed is highly unlikely to raise the benchmark rate by 100 basis points, given a decline in production and a slowdown in the recovery of the services sector after the pandemic. A more aggressive tightening may undermine fragile economic expansion. Many traders have already factored it in. Apart from that, market volatility may be stirred up by another factors such as the second quarter earnings reports, US GDP data, etc. The US dollar is rapidly gaining momentum, especially amid falling demand for the euro. Last week, the US dollar index dropped against its main rivals for the first time in months due to the strengthening of the euro and the yen. However, the global economic outlook still looks grim. It means that demand for safe haven assets is rising again. The US dollar has remained the most popular one among investors in recent months. This is why its fall today to the level of 106.51 looks like a short-lived weakness. Economists are confident that its price will jump to new highs in the near future. Of course, the rate gap between the Fed and other central banks is narrowing. However, the greenback has certain advantages, even though it's moving today in the downward channel of 106.50 and 106.88. US Treasuries went down following downbeat macro stats and expectations of a lower interest rate hike. Therefore, the yen, which was able to strengthen against the US dollar last week, is losing steam today. It's trading at 136.34. During the Asian session, the pair was consolidating in the intraday range of 135.86 and 136.62. Over the year, the Japanese currency has sharply depreciated against the US currency by 18%. The Bank of Japan's ultra-soft monetary policy and the strengthening of the US dollar were the main reasons for its drastic decline. FX analysts see no bullish drivers for the yen in the near term. At the last meeting, the Bank of Japan said it would maintain the dovish stance. Bank of Japan Governor Haruhiko Kuroda pointed out he had absolutely no plan to raise interest rates even despite growing inflationary pressure. It appears the regulator will remain dovish for the entire 2022 until Kuroda's term ends next April. So the central bank will not support the yen. Perhaps the yen will attract some investors as a safe haven asset amid risk aversion. Such a scenario will be extremely bearish for the risk-sensitive Australian dollar. The Aussie edged lower following a rally of the US dollar. It's also down due to a sharp drop in oil prices that has been going on for several weeks. The movements of the Australian dollar will mainly depend on the prospects of the global economy. Recession risks will increase the likelihood of its further decline. An upward momentum of the Aussie is likely to be limited as long as the US dollar is climbing higher. The Aussie is unable to rebound even despite the Reserve Bank of Australia hawkish rhetoric. The AUD USD is trading with a bearish bias today because of a fall in the US Treasury yields, falling commodity prices, and the expectations of the Fed's less aggressive rate hike. During the Asian session, the pair was grabbing in the range of 0.6882 and 0.6955. It broke through the 4-week high of 0.6920 reached last Friday. It's now trading near 0.6939. And this week is rich in crucial market events. Apart from the FOMC meeting, the US is going to unveil its GDP data. Investors are also anticipating the earnings reports of more than a third of companies included in the S&P 500. In addition, the largest economies of the Eurozone, Germany, France, Italy, and Spain, will reveal their inflation figures. Subscribe to our channel and stay up to date. See you soon.